Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we're taking a look at a requested stock. Recently there was a comment asking to take a look at Visa Incorporated, ticker V, and I'm just going to say it up front here. It's come down to a reasonable price and it's a no-brainer purchase. So we can get right into this one. It's quick and easy. I don't have really any complaints about it. Fair value right around $300. Current value around 275, and in the last 52 weeks it's hit a high of 293, discounted cash flows of 258. Earnings yield 3.53%. That's okay, a little low. We want to see earnings per share of 13.75, and what we're seeing out of them is not that for the next few years. This year expected to come in just shy of 10, next year just north of 11. So that'd probably be something we'd be looking at around 4 years out. But with how this company operates, that's okay. Cash flow yield 60%. I think this is one of the highest that we've seen. On average, 56.5. So climbing up and already very high to start with. Dividend yield kind of low, 0.77. Definitely not a dividend stock, but with the share price, not a huge surprise. Payout ratio 22.5%. So they could pay out more. They could double from where they are now. So we could see some decent dividend growth, and they do have double-digit growth. So making this a pretty good dividend growth stock. Returns are absolutely insane. 44.6 for the return on equity, 22.15 for the return on investment, and 20.2 for the return on assets. All really good. Debt to equity a little high, 1.29, but it's a financial company who essentially does loans. So the balance sheet, of course, gets messed up by that. Isn't like a traditional company. So I'm not going to say ignore it fully, but it doesn't matter as much here. Margins, insane. 79.9% gross, on average 79.8, and net 52.9, on average 51.2. Only thing here is it's trading at a pretty high earnings yield and kind of a low starting dividend, but otherwise things are great. This one has such good consistent growth that the market gives it a higher PE ratio, a ratio of 30. So based on how the market typically treats this thing, this earning yield doesn't quite line up with what we would traditionally see. They typically beat analysts' projections from what I've seen, but 3 years, 14.3, 2, 10.7, 1, 11.4. Analysts are expecting just shy of 10 for the next 2 years, so we're going to use 10 for our thesis here. Share count, they do buy back shares. I mean, at elevated prices, it might not be as quick, but 1 to 2% is reasonable. That's what they've been doing. So we're going to go with 1.5, right in between those. Cash flows, they have grown very well. I don't know that they're going to get an even crazier cash flow yield than they are right now. So I think it'd have to come in line or just shy of the revenue. That's why I'm putting it at 9%, because it has been slowing down, and that would put them above. Their average right now is 56.5. That'd put them on average over the next 5 years at 57.6, because that 60 is very high. I wouldn't expect it to go much higher than that. Assets, we're looking at about 2% and 3%, so 2.5 for our thesis, and 4% and 10% for the liabilities. So 6% there is what we're looking at for the thesis. Dividend growth, some nice double-digit growth. It was really strong this last year. They had picked it up a little bit, but we're going to go with 15%, and that's a really good growth rate. It put in 5 years the dividend at $4.29 per share. So your yield on cost buying it at today's prices is 1.6%. I mean, not an amazing yield, but better than the 0.77. Margins, I wouldn't expect to move much. They seem to stay really consistent on those. And that all gives us an average annual return of 9% once you factor in the dividend, just about 10%. And that is in line, kind of outperforming markets. So very good, strong fundamentals, in line with markets. Definitely a stock that I would consider. Just need to buy in at the right price. And today's price seems to be a pretty good one. If we're saying that the fair value is 300, it's $25 below that, so it's about a 10% discount on the fair value. You're looking at a 3-year return in line with markets and 5 years outperforming pretty well, getting an extra 13% because of that outperformance that you have over the 8% that you typically see with the SPY, with the S&P. So now we'll take a quick look at all the prices. I don't even really think that there are other scenarios there. This company is so consistent. I think it's come down on a dip, and it's a reasonable time to be purchasing it. I have picked some up for myself once I analyze this, and you can just see the consistency here on the prices. The only thing that isn't straight up to the left is the share price, which dipped down in 2022. Would have been a great time to buy there, and now it's gotten back on track, moving just in line with everything. Balance sheet is way down here, but as I said, they're not your traditional company. They're a financial company who's essentially doing loans and probably has a lot of liabilities on the balance sheet. We can take a quick look at everything else as well. Very consistent on the revenues. COGS stay pretty flat, and that might be why we saw a bit of an uptrend in those margins. Because, yes, processing more transactions, getting those high revenues is only adding a little bit of extra expense to them. And then the gross profit, net profit, and EBIT are all really good here. Everything is just stair-stepping up. Like, this is probably one of the best companies that we've taken a look at, in my opinion. What I don't like about the balance sheet is the negative tangible assets, but some nice growth there in the assets. Liabilities, we're seeing the same kind of growth, but as I've said, we can essentially ignore it with a company like this. Cash flows, this is a very important this is a very important factor, and again, just stair-stepping up year over year. Just perfect growth, a nice trend that they're on. And then the dividend. So there's really not much that I can say about this. They're very consistent, very good. A bigger dividend would be nice. So I want to thank you guys for watching. Please like, enjoy the video. Comment what other stocks we should take a look at, and subscribe so you can stay up to date with everything.